Now we'll move on. We're moving around the world. I mentioned we were going to go to Europe, and so I am pleased to invite all of our friends from the Central and Eastern Europe panel. Are they? There they are. Come on up, guys, if you would please. Thank you, and thank you very much. And the moderator for this panel needs no introduction, because it's me. So anyway, come on. Come on up and have a seat. We'll get comfortable, and we're going to talk about Central and Eastern Europe. And so it is my pleasure to introduce Babis Pandis from Blue House Capital. Babis here second. Actually, I'm out of order. Let me go in order. So Amit to my right, Amit Kayan, who had a great question a moment ago from Ryden. He's the founder and president, one of the terrific data providers in various parts of the world that we're going to be talking about. Robert Drishke. Robert, nice to see you. Didn't get a chance to say hello. Robert is here. He's the CEO of Panattoni Europe. Great story about what's happening in his area of the business in that part of the world. And then Babis Pandis, our friend Babis, who's a fellow Mesred alum. Nice to have you here, Babis. I won't say what year.
No.
Okay. And also Troy Javaher, managing director of Lincoln Property. An interesting story because Lincoln is a U.S.-based company, but you've been there how many years in that part of the world?
18 now.
18 years. So we have a lot to talk about. So actually, what I'll do, if you could just give us a quick background on where you're based, a little bit about the company, briefly to give everybody perspective. Then we're going to talk about the geography of the region, just to help people understand where we're talking about, in addition to what we're talking about. So I'll start with Troy.
Good. So just introduction.
Just give a little background on Lincoln and how you got there and what asset classes you're in and.
Okay. First, thank you, Stephen, for inviting me. I've been a huge admirer of this program, particularly for a long time. So, thank you. Lincoln, I think most of you know, in the U.S. is a major player here. Just some numbers to put that in context. We were founded in 1965, 7,300 employees at this point. We've developed 130 million square feet of commercial and 222 or 223,000 apartments. So that's the U.S. We were one of the early pioneers in Central and Eastern Europe. We got in there in '89, but we formed an exclusive joint venture with AIG Insurance in '97. And that joint venture did 52 projects in 9 countries and developed around 28 million square feet. So quite a sizable platform. It was a great run from 1997 until, of course, 2008. AIG had its issues. I represent version 2.0, which was started exactly 2 years ago. And we are active in, obviously, Central and Eastern Europe, both development and investment, similar to what we do here. And we, like Robert, we have been expanding west, and I hope in 10 days we will close on our first large project in the UK, which is a $1 billion mixed-use development just outside of London.
Thank you, Troy. Babis?
Hi. We are a much smaller company than Lincoln, of course. So we started 14 years ago from Greece with a dream to create a real estate investment platform that would not invest in Greece because we didn't like Greece at that time. So it was kind of instinct, chance, but we decided not to go to Greece. So we started from 2 countries that were, let's say, very familiar to us, which were Bulgaria and Romania, so it's on the southern part of Central Eastern Europe. And the reason for that was one that, for historic reasons, we're related, so we felt somehow familiar. And the second and very important reason is that those 2 countries at that time, the banking system was dominated by Greek banks. So this is something that you need in real estate, especially if you are a startup. So we started from Bulgaria and Romania. We moved to Serbia and Croatia before the global financial crisis, and after the crisis, we moved on the northern part of Central Eastern Europe. So we moved to Hungary, Czech, and Poland. So what we do is we raise funding. In a practical way, we're a private equity type of structure, so we raise capital from institutional investors, which are three types. There are US investors, there are European investors, and there are family offices from all around the world. And we try to allocate their capital and manage it in opportunistic and adding value strategies in that region.
Thank you, Babis.
So I'm running Panattoni Europe. Panattoni Europe is part of a US-based Panattoni development company. We are an industrial logistic development company which started in 2005 in Europe. We started in Poland and Czech Republic. Over time, we moved to Slovakia, Germany, and recently to UK. I'm based in Warsaw, Poland, and I'm overlooking not only Central Europe, but also Western Europe. We are probably the most active industrial development player in Europe, and the reason for that is Central Europe. Most of our volume is in Central Europe. Since 2005, year by year in this region, we were one of the most active players, and since 2008, so after the crisis, we became the most active player. Annually, we deliver to the market around 2 million square meters, which is 20 million square feet in Europe, and most of it is still in Central Europe. We try to grow in Germany right now, and we are probably one of the most active players there. And last year we entered UK, and currently we have 300,000 square feet under construction in UK also. So yeah, I'm representing a US development company in Central Europe.
Good. Thank you very much. And Ahmet Kayan.
My name is Ahmet Kayhan. I'm the founder of Raiden. It's a real estate data company focusing on emerging markets. One of the first, we started the company in 2007 out of Dubai. Headquartered our technology and data centers in Turkey, then grew into other emerging markets. I have two hats. I'm no more active in the Raiden data business. I became another entrepreneur again 4 years ago. We started using all the data that we created, layers and layers of housing and commercial data and valuations and trends. We use that data to create a Zillow kind of a marketplace in Turkey. We are number 2 in the market right now with around 7 million visitors or 400,000 properties listed. So we're growing both ends right now.
Great, thank you. Ahmet I emailed him when I was speaking in the Middle East, and he didn't know me, and he said, sure, I'll come to the class. We talk data, we talk startups, and I'm glad to have you here. We're going to talk data in just a moment. But I'd like to hear from you to set context. We've talked about Central, Eastern, Southern. What do you think? What do you refer to as Eastern Europe? When we think of Eastern Europe, what should we be including? We've got a map up here. I'm just curious to know, because it's a little different for everybody. What do you think, Babis? What?
I don't know. It's a very long discussion what we define as Eastern Europe. Yes.
Okay, the short answer.
The short answer is for the Europeans. Let's say now we separate between, let's say, Russia, Ukraine, and all the ex-Soviet Union type of countries. And then we have the rest of the part of Europe that is between Western Europe and Russia. We separate in two big groups. One group is, let's say, the EU countries and the non-EU countries. So in the EU countries, we have, let's say, the Baltics. We have Poland, Czech, Hungary, Slovakia, Romania, Bulgaria, Croatia, and Greece. I don't know if I forget one. We have Serbia, which is a kind of in the way to EU with a target of 2025, I think. And then we have the remaining Balkans. Yeah. So,
Robert, Troy, do you find when you're speaking with your colleagues in the US that you have to explain really what part of it is, or do they kind of get it now?
No, fortunately, they really understand the territory. They were early pioneers. So in that respect, this is a group of Americans who understand geography, which is great. What I would say, previous to Lincoln, I was running JLL's Central and Eastern Europe. And one of the things that was very interesting is, I was meeting most of the investors coming to invest, and it got to the point where any new investor that I would meet with, the first question I would say is, because I knew they were looking at Central and Eastern Europe, obviously, and I would say, what is Central and Eastern Europe for you? I would actually turn it against them. And the range of responses, which I think is quite relevant here, some would say, well, Warsaw and maybe the center of Prague, which aren't countries. And then you had certain individuals.
These guys are smiling when you say Warsaw and a little bit else.
Exactly. And then you'd have some investors who would say, we don't care, as long as the risk-adjusted returns are right. And I emphasize that because it's a nice moniker to have CEE. But in fact, there's so many different aspects about each of these countries. We combine them for a marketing purpose, but ultimately, there is no consensus on what it means. If you say to someone in Prague, Eastern Europe, and you're referring to Prague, they'll be very offended. Prague is actually the center of Europe, which is why, even though I'm covering UK to Romania, I live in Prague, because it's 2 hours to fly that way and it's 2 hours to fly this way, and it's Prague. It's a beautiful place. But the point of that is, it is Central Europe, and even using Central Europe versus Eastern Europe is a very touchy subject for many people. So I didn't want to get sidetracked on the specifics, but just, I would ask a question, if just a show of hands, has anybody been to any of those countries in the last 5 years? Okay, if you could just keep them up for a second. And did anyone leave with a far worse impression than when they went there?
Hand up or hand down?
Hands, keep the hand up. Yeah, far worse. And the reason I say that, again, is because most people generally go there with certain perceptions, misperceptions. And when they actually see what's there, they come back with a very positive view. What I found in the previous role was the most difficult part, was just getting people to get on a plane, go there, have a fresh view. If they did so, the reality of what they saw was very positive. And I say last 5 years because there's been so many changes.
This is the perfect lead-in. We've got Amit assembled some data for us to take a look. Amit, do you want to do just a little narration here? Just give us an overview of what, because unlike talking about Mexico broadly, generally the data applies to the whole country, generally, but we've got lots of different countries here.
Yeah, we're looking at, when you look at the CEE, actually, historic context-wise, you're right, there's no agreement on it, but we're looking at an area which is almost covering around 250 to 300 million people, excluding Russia. So it's a very sizable market. Almost every country has their own language, their own deep down history of economic and political different stories all around. But one of the biggest important thing about, I think, CEE to understand is that what made CEE initially start as a really strong destination for the investors was its proximity to the Western Europe. So, and it's still carrying that holistic view, actually.
Right.
So Turkey, we put that in CE. We consider ourselves.
We put that in for you. We put that
thanks
in
very
for
much.
you.
I was going to say that we consider ourselves part of you. It's not going in the right direction for the moment, but hopefully we're going to fix that one. So Turkey has for our business, we've been looking at the top actually 4: Turkey, Ukraine, Romania, and Poland, and we added Hungary recently because of the retail focus, and Budapest has been like on the radar of a lot of retailers and retail investors as well.
So a little bit of drop off in Poland, Romania, and Ukraine in population, but Turkey's on its way up. Billions in US, this is GDP.
Yeah, this is the thing. One of the biggest problem right now, I'm sure the gentleman would agree more, this is not a problem of CE, this is a problem more like the old Europe. There's a demographics problem. Right. So we are seeing an aging group of population, and we're seeing a going downward south number-wise population, which is not adding much on the especially in the housing market, huge impact on the housing market. With the EU entry point, we have seen that with Bulgaria, for instance, had very negative impact on the entire real estate market. There was like outflow of big population. So that EU impact had kind of, for the local markets, some negative impact in terms of the real estate. So, and we are seeing that there's a trend happening already as well.
So we're going to talk about products, but just taking a look at GDP, Turkey, the trends are up. Turkey, Poland, Romania trending up. Ukraine, Hungary, a little bit of a pullback in the last, 3 or 4 years. Correct. This is what the data is showing. This is what you've been experiencing on the ground, generally?
Absolutely, yeah.
Yeah.
Yeah, I mean, it's a low base, but the growth rates are generally consistent.
Yeah.
And, you know, the story of the CE is really the story of convergence, and you see that happening very quickly. Different rates, different impact from the financial crisis. But it really is a story of convergence in all respects.
But we have two countries like Poland and Czech Republic, which from an investment point of view, they are dominant, yes, practically. So Poland, taking out Ukraine and Turkey, which I don't know the data well, but Poland is like 1/3 of the GDP of all the other countries, so alone.
Right.
And from an investment market point of view, last year Poland was like more than 40% of the 12, 13 billion euros that were, let's say, transacted.
Right.
And Czech Republic was 30%,
Right.
although it's 1/4 in size. So.
Yeah, so we're including Poland, Romania, Ukraine, Turkey. We're including Turkey. Population. So we saw that in the previous slide, mostly flat except Turkey. Tourists. This was an interesting one to put in. So what does tourism? What impact does tourism?
Yeah, we have discussed it pre-panel as well that hospitality is one of the hot segments when you look at the entire Europe actually. But in Central and Eastern Europe, we saw that Ukraine is an anomaly, obvious reasons. Because of the war happened there and it's correcting right now itself. But historically, when you look at the core, Poland is kind of like interesting. It's just like happening right now. But Romania is happening, Hungary, Budapest, because of the it's more like main cities. So there is a good influx of tourism going into these areas. And there is the proximity is like what Troy mentioned as well. Like he's 2 hours to London, 2 hours to Warsaw, was it?
Or Romania.
Or everywhere actually. Yeah. So generally when you go there as a tourist, until you're going almost 3 or 4 cities at a time. You're going to Vienna, you can also go to Budapest and Slovakia. And so the proximity really helps the area as well. And this is a good reflection of that data actually.
Any hotel in your projects?
No.
No.
The one sector we do not do.
Babas, you done any hotel?
No.
No, not really. Okay, interesting. And so housing, we wanted to touch a little. We'll come back to housing in a moment. So what's happening with housing? Difference in every country?
Look, I think in the CEE region, it's a game of population housing. Right. So in the CEE outside Turkey, I don't think any investor would be very interested except Poland and Ukraine. Mm-hmm. Huge demand, huge gap.
Right.
Turkey is a different animal.
Right.
So we have 80 million population around. Every year we do have 350,000 new houses being built, and highly transaction volume is around like residential market. Mm-hmm. Most of the growth is coming from that. It's contrary to the rest of the Eastern Europe. In Eastern Europe, Ukraine is a very interesting play, and it's going on as well. They need housing. It's not like just an investment, but both at the end of affordable housing and the luxury segments as well. We see the same thing happening in Poland as well. It happened actually in the last 10 years. It's kind of downwards right now. It's correcting itself. But at the luxury segments, we are seeing very interesting projects. We looked at a couple of areas actually around Hungary, and there are lots of investors looking at. And Hungary has been very aggressive recently as well, also with I think currently around 300,000 euros that you can get a visa as well, residential visa. So those schemes are getting very popular in the Eastern Europe, trying to lure foreign investors into the market by giving EU access
right.
with the residency.
And what is the housing, this new housing product, such that it is in certain countries, for rent, for sale, a little bit of both? What's the structure?
It changed. Most of them are like for rent, that you buy and rent that. We are seeing a big, especially in a couple of very interesting cities, Budapest and in Bucharest as well. We saw that one. Sofia had it in Bulgaria, very interesting. Recently I saw one actually very interesting one. All driven Airbnb driven short-term rental units. Literally there was 20,000 units built and sold. People bought in. They get a visa on it. The management company manages for you, gives you 3-4% yield on your euro, which is great product actually, and you make money on the capital gain.
So it's the entrepreneurial market.
Entrepreneurial market, yes.
So which brings us to how is this being funded? Robert, how does Panattoni self-fund, or do you partner? How does that work?
We usually partner, and in Europe, country by country, we have different sets of investors because it's not like you can kind of, in our case, arrange a pan-European funding. So mostly our funding comes from European investors, institutional investors, but also recently from Asian and South African investors. In Western Europe, global investors are very present. In Central Europe, you have a mix. You have for kind of a large projects in established locations. You have institutional investors. For smaller projects and less established locations, we usually kind of capitalize with the local investors, regional investors, which makes our kind of offer very deep because of that. But what's recently kind of was pretty obvious is in the past, the Western European investors were very active in Central Europe. They are still very active, but Asians and South Africans are kind of very present recently, and the pie is more diversified than in the past.
Right. You mentioned the South. Tell us a little bit about, on the call, you mentioned a little about the money coming from South Africa.
Yeah, obviously, from the South African perspective, Europe is obviously a safe bet. Where in Western Europe you can't find yields, you can't find returns. In Central Europe, because of the fundamentals and lack of local investment base, still there is a kind of opportunity in yield. So that's why the South African investors decided to go and invest in Central Europe rather than in Western Europe. What's also interesting in Europe is, in our business, you have tenant demand in Central Europe, and you have investment demand in Western Europe,
right,
which is a bit kind of a mismatch. That's what we see, being present on both sides of the.
So tenant demand in Eastern Europe and investor demand in Western Europe.
Correct.
Interesting. Tell us a little bit about your tenants. It's not all build to suit, right?
It's no. I mean, we kind of currently we do a lot of build to suits. Obviously, Amazon is one of the key customers we have, but we do a lot of speculative projects too.
Yeah.
In a kind of a supply limited locations.
And would you two also say the same thing? Is the capital different than the demand? The source of the capital different than the source of the demand?
Yeah, I would agree. I think also interestingly, it's far easier for us to fund something that's of scale in Western Europe than it is to do it in Central Europe. But as Robert said, if you look at where Oracle is going and Microsoft and Amazon, and you look at all the companies that have the best prospects, they're all relocating to Central and Eastern Europe. And they're building the same quality of buildings. There's absolutely zero difference in those premises from what they have in London or in Paris or any other Western capital. So I think it's quite interesting that's been happening and it's not stopping.
They're doing that because of cost, or to be closer to the client, or all of the above?
I think it's a combination of factors. I mean, certainly cost is there. Initially, the call center activity, the classic, we send it out, it's cheap. That passed throughout. That's not being done anymore. What has happened is what you would expect, that the quality of the work and the level of sophistication has gone up. And so now it's gone from purely call centers to data processing to data analysis to actual writing code. There are lots of facts out there that people don't realize. If you take Romania, which again is Eastern Europe on the map, Microsoft will tell you that the second most common language within Microsoft is Romanian. That's not just Romanians in Romania, but actually Romanians working in other parts of Europe. Oracle just last year, 2017, opened over 680,000 square feet just in Bucharest. So, I mean, there are lots of specific companies and that we could name drop here, but I think the key thing is that those companies are actually going out there because it is cheaper, but also because they're getting a quality of work which is particularly attractive.
Right.
And obviously the labor laws are easier as well.
And what product type are you focusing on now with Lincoln?
So for us, we're essentially, we do residential, we do office, And we do small retail parks, sort of not strip malls, but the European equivalent of sort of strip malls.
Right.
Nothing, we won't do any shopping centers. We won't do more conventional retail.
Babis,
I
what's
want
the
to
sense
do
on-
two comments,
Yeah.
Steve.
Sure.
On what my friend Roy is saying.
Feel free.
The first comment regarding the capital source that you raised earlier, I think that it's very important that we notice in the last few years, for the first time, organized investment capital from locals. So what we call domestic capital. So this is something that we see mostly in Czech Republic and Hungary now. And we start seeing that also in Poland, slowly. So overall of the 12, 13 billion euros of investment capital last year, 25% for the first time was domestic capital. So this is very important because this provides stability to the market, also provides, let's say, a stamp to the FDI that the pricing is the correct one, because the locals understand better the economy and they understand better the locations. So we consider that this is a very, very interesting point that we see. My second comment related to all these foreign companies coming to our part of Europe is that we have to face now the reality that we get into a period where technically we get to full employment, which it's the first time that we see it in the region, and I don't really know how this will evolve. So in Poland, in Czech, in Hungary, in Romania, in Bulgaria, in Sofia mainly, we see for the first time that the unemployment rate is between, 2, 3, 4%, which is technically zero. So we don't know where the growth will continue coming from, and fighting for labor is a big fight in the whole pyramid of the labor market. Poland and Czech have been benefited in the last few years from Ukraine. So the numbers that you showed about Ukraine population, if you go locally, they're much worse. There are even people talking that Ukraine in 10, 15 years will be less than 30 millions.
Yes. Right.
And we have 2 millions of Ukraine moved to Poland the last couple of years. We have another 1 million probably moved to Czech, and they go there because of their Slavs, let's say, type of origin. So there is history behind that. They get better, they feel more comfortable moving there. These have helped both Polish and Czech economy to continue growing, but we don't know what will happen. So this is one of the big debates and one of the big risks that we have now and we see from the outside.
So full employment is a good thing because it means companies need office space. People are buying things. It's also tough on you in the business, right? Where do you get your labor, Robert? What's the good news is full employment. The bad news is full employment.
Yes.
Yeah, I would say it's probably bad news because our Central European business is based on kind of relocations from Western Europe, and people are relocated from Western Europe because of kind of many things, but most of them are looking at kind of efficient labor and also efficient labor codes, which are much more liberal and flexible in Central Europe than in Western Europe. So this is a challenge, obviously, but as mentioned before, Ukrainian immigration helps a lot. And we are obviously, our biggest customer in Europe is Amazon, and they, in terms of kind of a big box fulfillment development of their facilities, they recently, over the last 2-3 years, they completely focused on Central Europe. We were delivering for them most of the facilities, and obviously the challenge is labor. So they are looking for locations which can provide labor and proximity to the customer at the same time, which doesn't work. Really. So
And we have a housing issue in there too, right?
Actually, it works. Amazon is going big into Turkey right now,
Right.
and they're doing both. They're becoming closer. They're coming closer to the client, and with 3 fulfillment centers, and they're investing heavily right now. And they took actually 200 employees from the top e-commerce businesses and located them in the Central and Eastern European countries where they have operations for training. Then they're sending them back and starting next year.
Robert, does this influence what you're building? Certainly where you're building, but what about the last mile piece of it? Amazon, these are huge projects. Who's delivering closer to the client, to the buyer?
Yeah, obviously we try to focus on this type of business also, and this comes with another challenge, which is kind of availability of land in the urban locations, permitting, and low volume nature of this type of investments. So this is another challenge, but obviously volumes are growing, and this is obviously future for us too. But again, the labor component, and it's really visible on the border of Germany and Poland and Germany and Czech Republic. The facilities, Amazon facilities, are still serving German market in demand-wise. They're looking for labor. They want to be as close as possible to Germany, but there is no labor, so they go deeper and deeper, closer to Ukraine. The improved infrastructure is helping them to go deeper and deeper, to still serve Germany. But again, I mean, the labor component is a key factor behind our thought process where we build really right now. But at the same time, if you go and look for labor from like our point of view, you meet another challenge, which is kind of you go deeper and deeper into the countryside looking for labor. Yields, capitalization, liquidity has a negative effect on that. But it also brings value too. So this is what's going on right now in our kind of a business.
But labor costs also influence the construction cost bottom line, yes?
Absolutely.
Because it's not only labor, it's people. It's also, let's say, capacity of the local economy to produce.
Absolutely.
So we face that in Poland, yes. We faced that a lot in Romania also last year. Yeah. So we do a co-development, an office project in Bucharest with one of the large developers in Bucharest. They had done a tender a year before. So they had data a year before, actual data. So in a year, the construction cost per square meter was 14% up. So this is a huge amount of, a huge decrease that will come in the next couple of years and will also influence the residential market a lot.
So we know in retail is changing, presumably at some level in Europe, although I've been heard that it's not quite as catastrophic as it is in some markets here in the US. Troy, you have a little bit of retail. Is that service retail?
It's service retail. It's small. It tends to be in tertiary cities at best. So it's very suited to the local population.
So you don't think you'll get Amazoned? It's not that kind of retail?
No. We just because it's a little anecdote that I think captures a couple concepts we just raised. One is we had an investor on a separate account basis who wanted to give us €1 billion to invest in retail. I said, well, that's great, but what kind of retail? They said, well, we want only Poland and we want only things that are not dominant and defensive. So I wasn't quite sure how we were going to actually allocate that, but when someone's going to give you €1 billion, you do kind of pay attention. So we went and we did July and August of last year. We drove 6,000 miles across Poland, which is great team building. If you don't kill each other in a car, then you have a good team. And the thing that came out of that is not going to be a surprise to most people here, but you need to be very small or you need to be very big. All the projects that we were supposed to be targeting, which were sort of first generation, second generation retail in Poland, the fundamental problem is that Poland has been exceptional at taking EU structural funds, and the highways have been built in the last 5 years. And Robert, you and Bobby, you know that even 7 years ago to drive in Poland was just a disaster. Now you have new freeways. You can get from one city to the next rather quickly, and that has completely altered the landscape of the catchment. And that combined with some first generation obsolete product, we ended up only bidding on 3 projects in total, even though we had that allocation. We simply couldn't bid. The product was not there. We didn't believe in the future of it. So that's an example of where not only is retail obviously changing, but the infrastructure change, and I mean literally the roads, which has transformed Poland from a country of potential to a country of actualization at this point. has been happening so fast that it's shifting other aspects such as retail, other sectors.
But you have to find something that South Africans didn't buy in dominant retail, yes? Nepi,
Yes.
Rokas, they have bought almost everything that is dominant.
Exactly,
in
and
the
that's why
region.
we were not supposed to look at those. But I think the other thing is coming back to the point, I think also earlier, that the South Africans have bought massively. I mean, if you just look at those figures, Nepi, Rockcastle, Redefine, EPP, this is all South African money. They have, I don't know what the exact percentage is at this point, but certainly over half of all retail in Central and Eastern Europe is owned by South African groups.
That's a lot.
And what is interesting about that is as Robert mentioned, and Bobby knows this very well, that it comes back to my point about perception, because for them to invest in Romania or Slovakia or Hungary or Poland, Czech, it's an EU country, it's a NATO country, it's stable, and you get great yields, and the product is, if it's proper trophy, defensive, dominant product, it's going to have its catchment. And those opportunities were there for Western European investors, and they didn't touch them. They were not interested because coming from the west to the east is a very different perspective. I'm talking about Western Europe now. From Western Europe, looking at Central and Eastern Europe, there's a whole bunch of prejudices that go into the analysis, whereas coming from other places, when they look at this, for them it's Europe. It's not so distinct whether it's Eastern Europe or Western Europe. The difference is that the yields are better and the product is very good.
As the anecdote that a guy, one of the senior Nepi guys told us, 5-6 years ago. So we asked him, what did you see that all the other people, in Western Europe didn't see, and we cannot persuade them to see? He said, look, if I sit in Cape Town or in Johannesburg and put my finger on the map to Europe, it includes everything. So for looking from South Africa to Europe, Poland and Czech Republic are part of Europe. Exactly. So it's how far you zoom.
We talked a little bit about labor. Let's talk about the war, maybe the war for talent, which is a little different than the labor conversation. So we have Amit has startups. He has young workers, probably. This is the new face of business. Granted, Amazon and Oracle and Microsoft aren't going to go away, but we know there's this tremendous wave of entrepreneurial activity. Is that change? Where do you have your offices? What kind of building are you in? How many employees?
In Zynga, we do have around like 170 right now. We are hiring around 10, I think, each month. So we're going to be ending up around 240, 250 around this year. In Raiden is more stabilized business. In Dubai and Turkey, in Istanbul, we have offices. But in Turkey, we have 27 offices.
27 offices.
Different cities.
Okay.
So we cover each one of them. We have localized guys and serving these brokers. In Eastern Europe, one of the biggest trends that especially there are certain countries very known like Ukraine, Estonia for near sourcing and outsourcing. And they have really good talent for technology development, especially mobile. And not known in this part of the world, but several of the top gaming companies around the world is based in Estonia. And
In Estonia.
Estonia, they do have two companies.
Is in Estonia yet?
No. Very small.
Too small.
It's not a real estate play, more or less, but it's more like a technology play.
Mm-hmm.
And most of the talent, there are three waves actually, but the first wave was done between 2008 till 2012, and then mobile came in and changed. Most of the talent now works in Germany, UK, and US.
Mm-hmm.
There's a big outflow of really good talent out of Eastern Europe, especially in Ukraine, huge outflow. Most of them moved to Germany and Poland, and now moving out as well. Mm-hmm. So we are seeing that, we don't see that impact right now in the short term, but I think in the next 10 years, CEE will feel that very badly in terms of that population growth, because that talent, that each one of them has a potential of creating employment around them, between 10 to 10 million, whatever the size of the business they're going to create around in the next 10 years. Mm-hmm. So that's missing right now. That's getting out of the market. They're going to more prosperous parts of the world, which are also lacking talent. This is not a problem of CEE. This is a global phenomenon right now. I think there's a scarcity of that technology development skill set, and they're feeling it.
So what about the Oracles and the Microsofts and Amazon? Are they changing? Is your product changing to accommodate a different workforce? The same way we have, there's a lot of anecdotal information and information on how that's happening in the U.S. and in the U.K. market.
Even co-working, this kind of concept.
Yeah, different co-working models, different, this war for talent. What have you had to adjust in order to help those companies attract the talent?
Well, I'm just going to answer that with a slightly different approach. The interesting thing is, even within Lincoln, when we had the partners meeting in Dallas last year, we had the same conversation about what does Lincoln need to do to attract the right talent, because obviously we're ultimately responsible for the tenants who are responsible for attracting the talent. And you look at New York, you look at San Francisco, these different regional offices, and they say they show examples of what they're doing for their talent, and it's not an option for them. And what's interesting is that some other locations like Houston and others, not to put them down, but they just said, this is just pandering. This is ridiculous. You don't need to do that. Just put the office there and they'll get employed. So my point of that is just even within one company, there is a real difference of how important it is to actually accommodate that. What I will say in Central and Eastern Europe is that they tend to be very switched on, very connected, and they are definitely expecting creative office space. And this is interesting because some of the very good developments that were delivered even 5-10 years ago, especially if they're slightly out of the town center, and if they are very sterile, very nice but very sterile office buildings, my view is that those will have a very difficult time retrading, because already with this full employment, as Bobby mentions, which is a real problem, for me it's a real problem, you must have the right location, you must have access to transport, you must have amenities, you must have the cafes. And I'm just talking about the area at this point. Inside the building, they're expecting exactly what they've seen when they were working in London or when they were working in Cambridge. So they tend to be very entrepreneurial in Central and Eastern Europe anyway, number one. Number two, many of them have worked outside of the region and have come back. They have the same expectations. And I think a lot of the more successful buildings that were 5-10 years ago delivered are actually going to turn out to be pretty poor investments going forward.
And Babis, are you on the capital side? Is there an expectation that a building is sustainable or innovative or different, or has that not quite caught on at the same level?
I mean, our investors always want to have nice buildings.
Latest.
Yes, but on a cost-efficient way.
Right.
So you need to manage the market in a way that you don't increase your cost so much, but you need to provide sustainable buildings, which has been a story of 10 years now, even in the region. Smart buildings now, energy efficient, and new ways to provide, let's say, energy in the buildings. So the market is like being in Western Europe. I agree with Troy. I mean, it does not change anything. The capacity now, the technical capacity in the region is there. So my big concern is the employment, where the people will come from, which also has an effect in the cost side, which again, a problem.
Energy and sustainability regulations, certain countries, is this across the EU, or do certain countries have stronger regulations and requirements?
This is regulated by EU basically, so everybody step by step have entered the EU regulation, so all the buildings are in the same, let's say, code of
and Robert, does that drive, do energy costs drive decision making as well?
To some extent, yes, but not so much as labor costs, obviously, because the difference in labor costs between Central Europe and Western Europe in our business, in industrial logistics, is huge. So that's the main driver, especially with e-commerce. It's where this business is much more labor kind of consuming. That's the main difference.
Right.
But the cost of energy is there is also a gap between Western Europe and Central Europe, which is influencing the decisions, but not so much as the labor cost and labor code efficiency.
And so labor is still an issue. Tell me, or maybe you're not allowed to tell us, but are the Amazon warehouses all automated with Kiva? Is labor an issue for an Amazon kind of property?
Yes, because I mean, some of them are with Kiva systems, but still Kiva system is not kind of, I mean, it helps with labor, but it's not eliminating the problem.
Yeah.
So still the problem is there. And in case of Amazon, the biggest issue is obviously seasonality of the situation. So it's not easy to hire before Christmas and fire after Christmas in Germany. It's a bit more efficient in Central Europe. So they kind of appreciate that too.
Now, for those of you who don't know, the Kivas are the robots that move the racks around, so that really, if you look at it online, the warehouse pretty much has no people in it. It has the possibility of having no people in it.
Having less people, right?
Yeah, or it's certainly fewer people. Fewer people, yeah. So, Ahmed, how do you gather data in these to help these gentlemen make decisions? How are you gathering data?
We do have, traditionally, we do have 3 main layers. Now there's a 4th layer. The first layer is the government. So we work with land registries, municipalities, ministries. We go to the whatever kind of big data or whatever kind of data we can grab our hands in, that we do try to get that as the main base infrastructure, we call it. Secondly, we do have data exchange agreements. So we work with real estate associations, developers, banks. Mm-hmm. We have a program where they feed us with data, we provide them with data. That's how we started, and we grew we added agents and brokers, developers, banks,
and developers.
Developers, yeah.
Have you talked?
No. in their part of the world, actually, our focus has been more on the retail. Because and the 3rd layer is we only have in 2 countries right now. We have field researchers. We do have people on the ground. Mm-hmm. And they do monitor certain buildings. We have data in Turkey, for instance, in Istanbul, for instance, we have around 6,000 buildings data, and we monitor them. The 4th layer is an interesting one that we've been using for the last 4 years, is social media data. Not like the Cambridge Analytics one, but it's more legal data. So we kind of source the data, we feed into our platform, and literally that data transformed our business from a real estate play to a retail analytics, not only real estate but location analytics. Mm-hmm. And our biggest clientele is around that, using Starbucks, McDonald's, regular retailers, along with the high street ones. So we helped them. This is location agnostic, so we have data around I think around 60 countries we cover. And we did a project for a client of ours in London. We did a project in Moscow. We did a project in Warsaw recently. And we literally helped them to map the city, map the area, income level, predictive analysis. Because our data science team is literally, this is the interesting part. I saw in 2000 when I started my career working for a company started in Boston called securities.com. At that time, we were the first company collecting data in emerging markets, analyzing and selling around the world. So my goal, one of my job was a product. I was the head of product for the Middle East, first Turkey, then Middle East. So wherever we go, we used to put $1.1 to $2 million server data centers in each office. That was how we were growing our business, and we had 25 offices. We were creating literally servers to connect internet. Mm-hmm. Then cloud came and changed, right? So this exactly what happened then between cloud servers and everything is happening for the data as well, in terms of cloud computing and the data level, accessibility of that information, how it's cross borders level. For instance, we are one of my biggest suppliers of data right now is Facebook and Twitter, a U.S. company based in U.S. Right. Selling me data in Budapest, and we are utilizing that data, localizing and empowering most of these companies we work with. We did a couple of works for them, market analysis, and layering the information. There are more into that. The beauty out in real estate is highly fragmented.
Right, right.
It's almost impossible.
I was assuming it was.
Yes.
Yeah. Looking at data centers as an asset class?
Not yet, but we have a separate dedicated team of 5 people in the U.S. that just do data centers.
Right, right. And they're looking globally?
No. And I think there is a real opportunity. It was covered earlier in one of the earlier sessions, and I think I think Dennis mentioned it. But I definitely agree that data centers are something that are underlooked. We're not up and running yet on that yet.
Question?
Let me add one thing. We saw recently that the interest, the demand for data centers will not double, maybe quadruple, because of the Bitcoin mining impact of it, especially northeastern Europe.
Mm-hmm.
Huge investment coming in, already came in and coming in more. There is a scarcity of place, location, talent, literally.
And low energy cost.
Low energy cost, yeah.
For mining digital.
It's gonna not double, quadruple.
Quadruple. Question from the audience. By the way, you can text in through the app. So a question from the audience. How do you bake in Russian involvement in the region when pricing debt investments? Which I think kind of speaks to the broader issue of when you're along, depending upon which border you're on, does that come into play? Does that impact decision making? We know what we hear on this end, but it probably isn't accurate to the earlier point on the Mexico panel. What can you tell us about that?
About Russian investments, you mean?
Well, about anything that's the uncertainty that's happening in Ukraine. It's a huge country, so it's the uncertainty maybe in one part of it rather than the other.
I think that Ukraine is not investable, let's say, as a country today for nobody,
Yeah.
based on the social, economic, and political environment that it has. All the people also who invested before the crisis, lost huge amount of money. Famous people from US, from UK, everywhere. So Ukraine is a country today that people that are living on the West are moving, as I said before, to Western Europe. They go to Poland, they go to Czech. So nobody, I think, would invest today in Ukraine.
Yeah. And related to that, any potential spillover from other struggling Southern European countries, which they're not struggling
Greece,
as
yes.
much now, but and Babis, maybe you know.
Southern is the Greece, yeah.
I think that we feel that in Greece we're close to the bottom, or we're getting better, let's say, in a way. That's the first time that we start feeling, or the second time. The first time was in 2013-14. Then we had the elections that moved us, to a different political environment. Now we feel that we get better. So now I think that the problem will be the politics in Europe will concentrate in Italy, where are getting to a political environment very similar to which we got in 2015.
Right.
So it's going to be an interesting period for Italy.
So because certainly things were less certain in Italy and Spain and during the crash, have those situations stabilized relatively well?
Yes, I think that, it seems that Spain has stabilized a lot from a macro point of view, and also it seems that from an investment point of view, a lot of people invested in, a lot of FDI went to Spain, one, and two, that they try to find a way to, with the minimum, let's say, social cost to solve the NPL problems.
Yeah.
So in a way, it seems that today they don't have, or they claim that they don't have any longer NPL problems, especially related to residential and real estate market, which is what I follow. In Greece, this is the big problem that we expect, to make big steps in the next 12 months.
Troy, what do you think is the most interesting, exciting, best opportunity, either in product type and or country, maybe some place where you're not already? All right, can you tell us where you're looking, what you think is interesting?
Well, in terms of sector, I think the most interesting is logistics, but I don't want to compete with Rob. So
We'll come down to Robert.
So we stay out of it, but I think it is particularly, if you look at what's happened over the last 5 years, it's an amazing picture in Central and Eastern Europe. It's spectacular, and it's just going to get better. As I said, we're not really set up, and that's an operator's business, and it's dominated by people like Rob. So I think there's a tremendous pent-up demand for residential. both for sale and for rent. How you do that and how you pull off successfully is not so obvious, because there you're dealing with, even with, you take a for sale product which theoretically could be sort of designed in advance, and then, you know, if you take how certain Polish people, again, I'm not trying to rely on stereotypes, but how Poles like to approach a new apartment versus how someone in Romania would like to have a new apartment, there are significant differences in how you deliver the product. And so you can't discount and you cannot ignore the importance of culture. It doesn't fit into a spreadsheet, but if you don't pay attention to it, you will get in trouble. So we're still trying to figure that out. We're, again, for what we're trying to do in the UK, which is a massive project, it's over 1,000 apartments. I mean, for that, which is build to rent, we're going to be essentially developing this core product and then holding it. You know, there, it's purpose-built, professionally managed, fully amenitized. It's not unlike the product type multifamily that we have here. Would that work in Central and Eastern Europe? There's a lot of conferences about it, a lot of discussion. I'm skeptical, at least for now, because people do want to actually own, young people do want to own their first apartment. But I think that will come too. But my point is that I think residential, because there's such a pent-up demand, because the expectations have certainly increased, there is a lot that can be done in residential.
Babis, what are you looking at? Where are you looking?
I mean, we look all the countries, although I have to say that we feel that we are advanced in the cycle, you know, this period.
Mm-hmm.
So what we can sell, we try to sell. That's one. We like logistics. We like Panattoni a lot, you know. We partner also. So but we don't like a lot to do new developments, because with the exception of logistics, where the construction phase is quick, so you have an horizon of 6-12 months, and you have the building, you know, producing income. The other sectors that need a lot of time, so you need to take a view for the next, you know, 3 to 4 years of construction. We are a little skeptical, so we prefer to play the repositioning game still. Although I think that for the first time after many, many years, we feel that Greece has also opportunities now.
Greece is back.
I mean, it's 13 years that we have been, let's say, negative on Greece, but it's the first time after 13 years, and we started with a vision to go outside Greece. So after 13 years, we start thinking of, you know, doing a few things in Greece.
We like your optimism.
When you have unemployment, you have talent,
Mm-hmm.
you have low cost, and you have fundamentally, you know, you have an economy still working, yes?
Right. Robert, they all seem to want to get into your business.
And I would like to stay in my business.
Yes.
So obviously, yeah, I think logistics is the new asset class, is the kind of new exciting place to invest because of e-commerce. And
Still early.
Still early, still very early. And if you look at countries within Central Europe, you might not see that, but Poland is the second largest country around Europe, demand-wise, behind Germany. So if you take a kind of a take-up in logistics space, in Poland is the second largest behind Germany. It's ahead of France, it's ahead of UK.
Wow.
That's what's going on, and there is no border between Poland and Germany. The only thing which is between Poland and Germany is 150 basis points yield spread. So it's kind of, and we built facilities, exactly the same facilities on both sides of the border for companies like Amazon, the same quality with a different yield. And obviously you can see the trend, you can see what will happen in the next future. But also what we try to do right now in Central Europe, in Western Europe, is to create a kind of a program for last mile logistics. And this is obviously limited supply kind of a location type, and demand, growing demand and pressure from other sectors also within the cities. So I think that's the best to invest going forward.
Great. Ahmet, I'll give you the last word.
It's-
What's the data telling you versus what do you like?
Well, in the morning, that after hearing a $25 billion fund selecting data centers, so it's hard to say anything like. So data centers definitely. I mean, several layers, not only because of the growing businesses around it, but also like this blockchain and Bitcoin mining and whatever it is, like what's going around that definitely have a huge impact on it. I'm a big believer in last mile in logistics, and I was with the founder of one of the first last mile logistics companies in Dubai. He is in right now 8 countries. It's official right now. Literally, the first year he made, it's been 3 years he's been active. First year he closed the year with $5 million of turnover. Second year, $38 million. Last year he closed at $160 million of revenues. So that kind of growth, I think, delivers lots of investors inside. It's one of the first unicorns of the Gulf, Middle East. And I think that's missing in the Central East, not only because of real estate play. I think there's a huge gap there as a real estate play, also an operational vertical as well.
Right, right. Well, this has certainly been enlightening for me. Thank you very much to our panelists for sharing everything. Troy, Babis, Robert, Ahmet, let's thank the panel.
Thank you.